Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian, and I'm back.
Yeah.
Already trolling you.
And I'm Will.
Wow. He's like, hey, you're not going to welcome me back, guys? Last week I wasn't here. Jeez. Wow. Brian, I'm glad that you're better.
Yeah.
And we will
Thank you guys.
we won't mention how
You
sick
weren't
you were.
snowboarding, right?
No.
Yeah,
wasn't
unfortunately, not this. I
snowboarding.
I was sick.
What's the opposite of snowboarding?
I was
At home?
surfing.
Yeah, ugh, gross. Okay, guys,
Yeah.
we got 4 topics today to talk about. The title of today's show is "Some Renters' Hopes of Buying a Home Have Completely Disappeared. Who and how can we fix this?" So we're gonna go right from the top, guys. This is from CNBC. This article sucks. Renters' hopes of being able to buy a home have fallen to a record low. New York Fed survey shows. The share of renters who believe that they one day will be able to afford a home fell to a record low 13.4%, according to a New York Federal Reserve survey released Monday. Hey, guess what? Things aren't looking good for the Fed once again.
Yeah.
Now, one of the things that stuck out for me from this was renters don't really know anything about the purchasing process. So I think that's the biggest thing that they lack is understanding the process. Like meeting with a few buyers this week, first time buyers, they're completely lost about, what anything is besides, your regular escrow, down payment, closing cost terminology. But once you get into the actual terms, people are lost. Like I was talking to some buyers, they're like, what does this document even mean? And I'm thoroughly reading it for them. They're like, you do this for a living? He's like, how can I?
Hold on. Wait, can I pause for a second?
Yeah.
Why are you saying that that's what's dashing their hopes, that their lack of understanding or proximity to the process?
Because of the fact that you can prepare yourself, and if you have the right adequate information, you could take the right steps, maybe not be ready right now.
I'm asking you because I'm basically testing your theory that if I know how escrow works, and then I'm going to be more likely to want to buy a home.
No, you'd be more strategic to be able to understand the market and how to maneuver yourself.
Okay, got it. All right. I just want to make sure you can convey your point properly, because it sounds like you're saying, oh, well, your lack of understanding of how a process goes is why you don't want to buy a house.
But just like anything, whatever you're scared of, whatever you don't know, you're scared of. So it's like, oh, I don't know how to start the process. It might be complicated. Maybe shouldn't even start. And they say it's already super expensive, hard to get into it. Maybe I shouldn't even try.
God, what did I say? Comfort kills.
Yeah.
Ooh, man, the comfort kills. That does. So the share of renters as of February who possess hopes of residential mobility or the belief from renters that they one day will be able to afford a home fell to 13.4% in the central bank's annual housing survey from 2024. One thing, it is a survey. Another thing, even if you added 10% to that, it's still 23%. And unfortunately, we've talked a lot about behavior. We've talked a lot about psychology. We talked a lot about the math of being able to afford a home, qualify, compete and bid, get into escrow. And this is that psychological component I've been talking about with you guys. Like, I think
also
people are frustrated.
Yeah, we got the media. We got this whole inflation thing. You going to the gas station, pay more for your money. The government blaming us that inflation's high because we spend our money on certain things, not really acknowledging that we're just charging these things. We talked to a realtor earlier this afternoon, and they were mentioning that foreclosures are going, they're up.
NODs, yeah.
NODs are going up, So I just really think in general, this is not just going to pertain to renters, because obviously who doesn't own, they're probably renting somewhere. But yes, I have to agree with all the information that's been going on. There was a survey that 76% of people right now are against buying a home.
Yeah. Yeah, and I mean, and we specifically on the mortgage front, I mean, this part was, it caught my eye. And I kind of stopped short of saying it startled me, because it didn't startle me, but it caught my eye. 74% of the renters viewed obtaining a mortgage as somewhat difficult, which was deteriorated because, it's increased from 66% in 23 and 63% in 2022. So the perception that getting mortgage is more difficult is also being met by the truth of underwriting is it's more difficult right now than it was even a year or 2 years ago.
Truly. And even for some people that, got job raises, got higher incomes, they're still facing the affordability challenge where rates are continuing to go high. So even that increase in income is not meeting the pricing that they need right now.
And again, we're talking about a whole renters, right? Nationwide. The majority of renters, they're really in really fixed incomes.
Yeah.
And the people who are really getting affected right now with inflation and with these elevated prices of gas, food, and all that stuff are the ones that are kind of in the lower end, right?
Yeah,
like
lower
really
income.
fixed. So of course.
Well, low and middle now. Yeah. Low and middle income.
The middle are struggling. So just imagine the low.
Yeah.
That actually take more of there are more renters. And remember, what I was saying, meaning earlier, they're comfortable is because that person or that family has been used to renting for longer periods of years than the other normal person has.
Yeah.
So they're really thinking like, hey, with home prices the way they are right now, with interest rates the way they are, with everything the way it is this is not even attainable.
Yeah.
Yeah.
So
and then I also saw right there, and what do you guys think about this? Respondents think mortgage rates are only going to go higher. The outlook for the year from now is that borrowing costs will be 8.7% and 9.7% in 3 years. Both surveys record.
wow.
Yeah, it's really hard to speculate. I mean,
Big
part
time.
of what we do on the show is we speculate about things. Oh, the Fed's doing this, rates doing that, the market's doing this, inventory's doing that, prices are doing this. So we look through these lenses a lot of times in the rearview mirror and then try to, speculate what is going to happen next. And this is a survey. These are survey respondents, and we're also respondents in a case too. I think the real challenge in this is that it is unpredictable. And on last week's show, we talked about the volatility being one of the biggest threats to the market in 24. And it's spring buying season. Oh, summer's coming up. This is when we see more inventory. We see more listings. We see more buyers. We see properties trading hands. But the big but was volatility of cost of borrowing money is going to be the outlier in what makes this spring and this summer like normal or not like normal. And I think that's what we're seeing here too.
Let me be a respondent to this. I disagree with that. Period.
That's good. I wanted to see your guys' answers.
It's not going to be there only because, remember, the U.S. we're real estate driven.
Yeah.
So if things get like that, we're not selling anything. Nothing's really, really, really happening. If things are slowed down, it's going to slow down. It's really going to cause no affordability for the majority of people. I mean, the affordability is already hard at a 7.5%, national interest rate, average interest rate right now. Imagine just another 0.5% up or a 1. Here they're talking about 2 and change percent. I really doubt that'll happen.
And that's what I think is interesting, that they throw out all these, random, responses, because it's like, that in itself gets people to think like, oh, okay, so it's going to get worse.
Well, and I mean, they didn't put a number here, but it says respondents think mortgage rates are only going to go higher. So that would be equal 100%. So 100% think it's just going higher, and the outlook is now substantially higher than where we're at today as far as today's market rate if you took a snapshot. Again, I think that points to psyche. Part of it is you can only blame so much of that on, you're just far away from the data or you're far away from the information. If you strip that out, well, then my feeling about the market is still my feeling about the market. And there's the part you can argue, I can't qualify because on paper I can't qualify. And there's now my hopes are dashed because I can't qualify. And then now I'm answering this survey.
Yeah, and you saying with the hopes with that, Andy, that's the thing that when I read this article, it really impacted me personally, because me being a renter and being raised with a single mom, seeing this kind of makes me kind of sucks for these people that have no hope of them being able to have home ownership, because I know a lot of them, just like me, I didn't realize the difference between living in an apartment and having a home. It's just a different life.
100%.
So it kind of bugs me that this is happening personally, because I already know the fun and all that, especially if you're a family, you have little ones.
Yeah.
Having that backyard and having all that stuff is a lot of fun.
Well, let's wrap this part then by saying how do we fix this? How do we fix this? Number one, we have to help show and help people and teach people how they can maybe increase their money. Number one, fix our credit. Number two, they can decrease their debt. Number three, they can have side hustles. Number four, they can look in areas that are outside of their current, just a little bit outside the margin, and then look for a place that may be a little bit more affordable. There's just a way to get started. So there's a lot of ways to at least have this conversation with us, or if you're not in this area, have the conversation with people in your area about what is your aspirations are in real estate and mortgage, and then start having those conversations. Share the dream. Find someone who's willing to get behind your dream and give you the information you need to help get on that path.
Look, I'm just like this. For a whole minute, Andy, so true what you're saying. And I'm nodding my head. Yes, I agree with you 100% with all of that.
It's what you have to do. It's
have
just
that
what you have
budget,
to
make
do.
that sacrifice. Absolutely.
And that's what I was saying, because it's like all this negativity, but where's the solutions? But then again, you provide the solutions, and you realize that there's only a certain amount of people that are going to apply them. And then it goes back to what you said, comfort kills. And unfortunately, by default, people get comfortable and they're like, not for me, it's too late. And unfortunately, your family or the people that depend on you are the ones that end up losing
I think
in the long run.
I think I'm gonna have a nodding here. Just you guys are it's great. It's so true.
Hey, next week we're gonna put a bobblehead at the end of the table.
Yeah. No, it's so true. Great advice. Yeah, find the root of the problem and then kind of go from there. And everything in life that we do has a sacrifice.
Yeah.
So
Yeah.
just sacrifice right here. Create that budget, save some money, and then have a, how can I say, is have a bullseye, right?
Yeah. Attack,
Have
attack,
a plan,
attack.
and then that way, if you plan now, you'll hit that bullseye.
Yeah.
Yeah.
Right.
Yeah.
But with no planning, you ain't gonna hit nothing.
No.
Yeah.
I know.
So.
Guys, let's talk about the next article. This is from Redfin. This is housing market update. Record high monthly payments can chill spring selling season, but declining rates could boost activity. Well, this is having it both ways. And I know we talk about sometimes we play it down the middle on the show on the topics, and we argue about some things, and we agree on all things,
Like a seesaw.
some other things. But really, this is about inventory, number one, and high rates preventing buyers from getting in. You have an increasing supply of homes, but really still not at the clip that we'd want to see to kind of course correct from where we are in the bottom last year.
Yeah.
So I don't know. The home prices and rates are really kind of this volatility that we were talking about from last week's article. Economic activity has a lot to do with this as well. I wanted to ask you guys. I know there's a lot of information in the article, but what is based on what you know now? It's the middle of May. What do you think this spring and summer season will bring? Is it going to be the new normal? Is it going to be the same as 23? Do you think it'll be better than expected?
It's definitely going to be better than 2023 because the reason for that is we have a higher amount of homes available now. I think last time I recently checked, we're like 565,000 versus last year we were at 30,000 more or less. Yeah. So that does make a difference. When in a monthly basis, when you have more homes available, obviously it's going to create more activity in the market because there's more homes available. If the rates do decline, I think that growth of homes that we've been seeing grow because of the higher rates recently. If we see the rates coming down, I'm going to say that our inventory is just going to go down. And we're going to go back to that same problem again that we've been having. And that's the root of why home prices have been continuing to just go up.
And, to add on to what Will said, I think they hit it right on the bag with what they said right here on the market. The market is a mixed bag. And different price points have different competition. Like if you look at the $1 million, like $1 million 900 jumbo, or even like, some non-conforming like limits, they're sitting on the market a little bit longer because those higher rates are really denting those payments, and people are really, iffy if it's going to make sense or not. They really have to get a good deal, maybe some buy down credits from the seller to, really ease them up into wanting to get that house. And
it requires a larger down payment.
100%. Yeah. And what I do see is that they did see it in the, that they did mention in the market, in the numbers, was that the median sales and the medium price homes is where a lot of the competition is sitting at. And that's where I see that there's a lot of bidding wars. There's multiple offers because everybody's at that range where you can only be at around the conforming. Anything lower than that, you're not really finding anything here in California. Yeah. But the median price homes is where I see the competition happening this spring, this summer, because everybody's a regular person looking to buy, but the people that have the upper hand are those that have a house to sell. If you have a house to sell, you have deeper pockets, you have more creativity in how much you can offer. Yeah. You just have more breathing room. Unfortunately, first-time buyers right now, you really have to make a really big sacrifice, or it's going to be a really tough time for you to jump into the market.
I think there's saturation around that median home price because that's kind of where people can get in, right? That's like the entry point now. So I think there's saturation. There's obviously pockets of the country where they're going to do better versus others, and I'll go to that in a second. But I wanted to point your attention to one thing, guys. If you look at bottom of page 4 on your notes, there is a column here at the very bottom. It says Google searches for, quote, home for sale. And you go 2 columns to the right. It says year over year change down 18%. What's the source there? Google Trends.
So people don't want to buy.
People are not looking for
Google
houses.
Trends search term home for sale is down 18% year over year. This is why I asked you the question: do you think that this spring is going to be the new normal? Is going to be about the same as 2023, or better? Is because we are seeing evidence of this psychological pressure or psychological disappointment, if you will, that even in Google search, which doesn't cost you anything to do, we're down 18%.
Yeah, that's crazy.
What do you make of that?
Yeah, it makes it that there's going to be less people in the market.
Well, yeah,
for sure.
But I mean, let me rephrase the question. Are you surprised by that, or are you like, oh, okay?
No, I'm not surprised.
You're not surprised. Okay.
I'm not surprised. There's all this information. I mean, it almost seems pretty redundant on when we're talking about certain things that are happening in the market. When we get on our Mortgage Heroes podcast here. We this trend just keeps going, and it doesn't get better. I don't see anything that makes it better. All I hear is this tax credit that's supposed to come out,
we're not there yet.
Or we come out with the Cal FHA that has a dream program, it has this, but then the funds are gone in 10 days. So it's like, where's the hope?
Well, then let's great pivot. I'm so glad you said you didn't know that. You didn't even know we were doing it. You're doing such a great job today. Here's the hope for San Diego on your next page 6. Jump from 4 to page 6, guys. At the bottom, you see new listings. San Diego up 21.5%. Now, I'm also going to qualify that with a little asterisk and say it's because we were in the dumpster last year. So
anything up is better.
Anything up is greater. 21% sounds like a lot, which it is statistically,
Just
but
catching
it's also from the bottom.
Yeah.
I mean, let's be real. I'm not going to pretend like, oh, it was at this great rate last year and now it's 20% higher. No, it was really hard last year and it's 21.5% higher than that.
Especially when you're paying attention to 2022.
Well, absolutely.
Comparing it to it, I mean, just...
Right. So again, I know I'm saying, I'm trying to deliver like good news, but at least locally here in San Diego, there is more selection now than there was last year, despite the fact that our Google search for home for sale is down by 18%.
Let me bring something to your point here, okay? So when we're talking about that, depending where we're at, because we're here in San Diego, but we have this area called Bonita. There's a home that was listed for $990,000, and they had it range to $1,025,000. Okay. Again, my client says, Will, okay, I think we're ready. Can you send me a pre-approval for $1,225,000?
Right.
I'm like,
yeah, we're in.
Bro, that's like 200. We're in. He gets in there, bro. There was higher offers, so most likely that was going to go to 1.3. And the property
crazy.
Needed work. Like you go into it, it needed easy another 60 to 80,000.
But explain why someone's willing to pay that for that house. Tell everyone here why they would be paying that much for that house in Bonita.
When you look at it there, like Bonita, the way I say it's kind of like our Coronado people don't really want to sell. When they sell, like people want it because they have
families.
land.
Yeah.
And something that we don't have right now in San Diego much of is we're running out of land. Right? Because there's certain things that we can't build, into the west, east, etc. But anyways, they saw that property's sitting on a acre lot. So they're like, well, wait a minute. I'm thinking like, I get in there, I can put another property. Like if it's so inexpensive to build another property there, right? But it sounds so easy. But they're looking at for the future opportunities and value of what that can be moving forward.
Yeah, thank you for clarifying. I wanted to make sure that people who are not familiar with the Bonita area or even these parts of San Diego, there are lot sizes in Bonita that are much bigger. You can build a second home in some of them. You could build up. If there's a lot of single-story homes in Bonita too. And you could build an entire second story on top of that home and still build something behind it.
I mean, when you guys are driving by the golf course and you see right there, that's like a 8,000, 9,000 square foot home.
Oh, there's some massive homes up there. But, $1.25 million is not, let's not pretend like that's a chump change. That's a lot of money. That's a ton of money.
It was with 20% down. It was like a $9,000 payment.
God, man, that's crazy. But okay, but to your point and to this, it's like, dude, this is the San Diego thing. Like listings on the market. There's more people coming to the market and putting their homes on, and they're gonna get the money they want. Yeah. They're gonna get the money they want, guys.
Yeah.
So
it's again where you are at.
Yeah. Well,
okay. What did they say? What are the 3 important rules in real estate?
Location.
That's it. And keep going.
Location.
Okay, guys, we are going to finish out with this is our last article of the day, okay? It's going to be American families are typically spending 24.2% of their income on mortgage payments.
What?
I said my notes right here. Where is this at? Because the
hell?
DTIs I see are all over 30 to 35%.
That's what I love. Like,
I read this and I'm just like,
what?
Wow.
Trash.
You're like, Andy, there's an error in the article you sent us. Please put in another article
Andy,
for the show.
I just approved someone at 56% ratio, so please tell me how.
Yeah, like, our average is like 40 plus.
But that scared me because I was like, okay, so if in other places they're only using 30, whatever they said, 24%, and over here they're using 50%, like, yo, that's a crazy
huge
difference.
Disparity. That's a massive disparity. And so
I love our faces.
And maybe because we're here in California that we think this is so alarming.
Again, this is nationwide, Brian.
Yeah, but the context. Yeah, you're right. The context totally matters. I mean, this is a National Association of Realtors report.
Not here in California.
And by the way, this was with a quote unquote typical existing single family home with a 20% down payment.
Okay, even worse.
This is after putting 20% down.
I'm over here minimum payment VA loan. No.
Yeah, no. I mean, here's the the thing I was going to say about this.
Sorry.
I think that's great
Got
for the
excited
people
there.
who are living at this level
Yeah.
of existence. That's fantastic. Here's what I would also say, and this is going to be the nostalgic part of old Andy, is that, man, I really want this for everybody. I would love this for everybody else, because this is not true for most of the people that were qualifying and who are making really good income to qualify in San Diego, but it's still 35, 40, 45% of your income that's going to the housing payment. But it also reflects a state of our little pocket of the world where San Diego, it's just getting more expensive to stay here and to qualify. And this is a reflection of the rest of some of the other parts of the country where, you know what, people can walk in and only spend 24%.
Yeah.
I love that for people. I really do.
I mean, listen, I just qualified this morning 2 active military personnel, and they're both received their BAH. Dual income was 16,200 and change.
Their BAH was 16,000?
No,
Combined income.
Combined income.
Oh, combined. Okay, got it.
income. Combined income.
Well, still 16
And then
grand.
that's me grossing up their non-taxable like BAH and BAS, right?
Jeez.
And obviously, they have to get into something. So 950 is what I approved them at, and their back-end ratio was at 45%.
Wow, that's crazy.
I mean, that's what it is, right? I mean, I'm hoping they do find something between that 7 and 950, but
Like you said,
they
700
got-
and 950? 700,000
700 to 950,000.
That's
Yeah,
a big
qualify
range.
950,000. You know, we put that calculator with the 3 payment scenarios, etc. I send that out, and I'm just hoping they do find something, like, because everything's so crazy. Everything that they're finding around here right now does require some help, you know?
Wow. And
Well, as far as, I mean, the payments, the rates, and all that.
Well, as far as, you know, you're going to go into a property, it's not all of them are turnkey. They need some
They
help
need some
depending on
work.
what you're looking at.
yeah.
Right?
And I'm gonna say this very cautiously, especially at the lower end of 700,000. Lower end 700,000, yes, but
It's a low end?
So when you're
That's
looking
gonna
at this
require some work.
24%, for us here, and again, I know this is nationwide, but for here, San Diego, it's pretty crazy.
Yeah, I think, you know, like I said, repeat buyers are the ones that are winning right now. Investors as well, because they have the funds to be able to, you know, continue to go to these higher price points. And it says right here, first-time buyers typically spend 36.5% of their family income on mortgage payments. So that's a little bit more reasonable. Okay, okay,
Yep.
you add some debt on there. Now you're up to the 40.
Yeah,
you know?
40s.
yeah.
But at the same time, it's just like, why is it so much?
It's just a lot because it's a lot. I mean, we already know the variables in this, guys. The article is unfortunately more confirmation of why I think at the very beginning of the show we're talking about renters and kind of like having their hopes dashed that they're ever going to be able to buy.
Yeah.
And then, you look at this and go, well, in some places maybe that's not true. Maybe in some places 24%, 36%. That's great.
Yeah.
That's actually, I'll say, maybe what you should aim for, shoot for, make that your target. That's a very healthy place to be as far as your cost of living is concerned when it comes to your mortgage. You start talking about 50 or 40, 45, 50%. That's a much heavier lift. But I'm also going to repeat something you've said on the show many times, Memo. It's not always like that. When you get in, it might be that way. But over the course of the next 3, 5, 7, 10, 12, 15 years, if you're going to buy this house for the long haul and your situation economically improves for you financially, income-wise, reducing debt, et cetera, then that might just be the hardest it is at the front end of this.
It just almost seems like the world just conforms to your situation as you move forward. In the beginning, it feels like, oh my God, doom and gloom, right? But then next thing you know, it's like, okay.
I think
Not bad.
I think we start
you know,
tolerating.
I'm okay with the $1 menu at Jack in the Box. I'm getting used to that right now.
fine.
Okay, 2 tacos for $1, no problem. I'll do that. And then you're like, well, now I can get a cheeseburger, no problem, right? Like,
Add a
and then
drink.
like next thing you know, it's like, okay, now I get 3 Happy Meals with the kids, no problem. I can afford that, and you get used to, you conform. But the cool thing about it is then you start seeing your values go up, and you start seeing, and you start building some type of legacy for your family.
Yeah.
So those are all the rewards. Those are all the risk that you took, and anything that you do in life comes with the risk. I don't care if it's a purchase, if you're renting. You could be renting an area and all of a sudden that school just doesn't conform for your kids. Or you're going to have to move them out, or you got that neighbor downstairs that keeps going with your broom, hitting you up. Hey, cállate, be quiet, right? You never know. So things like that. You know what was crazy is I see here the 10 markets that were found that we had that 23%. It's like, I never even know they existed.
Fond du Lac? You never heard of that place? Wisconsin?
Kankakee?
It's right next to the.
It's
Never mind. I have no idea what's next to.
Kankakee, Illinois? Kankakee, yeah. Like, come on, 22. Rockford, Illinois, 20.
Yep.
You know, like this other city, Campaign Urambana.
I think
All
the takeaway
Illinois.
is Champaign.
Oh, is that what it is?
I think the takeaway is that there are places where entering into home ownership actually is still accessible.
Yeah.
And so much of the time we
I'm
talk
glad.
here is and so much of the time we talk about here is the challenges. But again, we also have like wild successes with people that are coming to San Diego, investing in San Diego, buying in San Diego, staying here, keeping their place, or whatever. But for those of you outside of San Diego, outside of California that are watching the show still, there are places that are probably close to you, within a half a day's drive that you can afford to get into.
Yeah.
And I love that. There's a lot of things about real estate and mortgage that I think are troublesome to us as professionals, but I am still hopeful that there is a way to enter the market for people.
Yeah.
And I kind of like this set of articles today because of addressing some of the challenges and what we need to do to fix them, but also just the reality that it can still exist for some people. And I want everyone to still have hope for those things.
Yeah, exactly. Stay encouraged, stay optimistic. I know during these times it gets difficult, but at the end of the day, just do what's best for you and your family.
Yeah.
I think we all want everything right now, and as long as the dream doesn't change, you can work up towards it.
Yeah.
And I think right now that's the best time to straighten out your plan and really get in line with what you want, because the opportunities are going to be there. But if you're not ready, it doesn't really matter if the opportunities are not.
You're going to continue missing out.
PPP, right?
PPP.
Prepare.
PPP.
Thank you guys for another great show this week. I know we had to kind of tackle the rental thing. We're not going to fix all the problems like right away, but I did want to encourage some of you out there watching that you can do this. We are helping people do this, and we have advice to help you along the way in case you are not ready right now. We can help get you ready.
Correct.
So thank you so much, Memo, and for Brian, for coming to talk about these things today.
Of course, man. We love our community, want more people to get educated, and they are. We mentioned that last week. Like, I just like that people are coming now with better questions.
Yeah.
And even when I talk to realtor partners and stuff like that, they're asking great questions.
Yeah.
So I think the concern of just putting a person in a home because you're going to earn a commission or what have you, it's kind of like that's becoming not the thing. It's becoming like what's being done rightfully for that client and their family.
And how you're setting them up for their future success with that first property. I think that's where you distinguish, a good agent from, a regular agent. Say, they take it a little bit further.
Yeah.
They paint the picture of what the true vision could be, and then actually give you the steps to be there, which is, I feel, what we're all about, what the people that we work with is all about. And I really believe that, if you have the right people behind you, you can make it happen.
That's always, and also in life. The cool thing about this market now, 2023, it handed a lot of people's butts. And I think a lot of those people that were doing it for the wrong reasons are no longer in the business.
Yeah.
Mm-hmm.
Right. And so I think now it's survival of the fittest, and the ones that are going to be fittest are the ones that are really looking out for the best interests of their clients.
100%. 100%.
Well, thank you guys once again for another great show. Thank you all for watching the Mortgage Heroes Weekly Podcast. Remember to like this video, subscribe to the channel. We also have our other playlist, Friends of Mortgage Heroes, where Brian, Memo, and myself interview and talk with our friends in and around real estate about their business successes, failures, and their aspirations, and help other people reach their goals in real estate and their financial life. So you guys are really happy with doing this show, and I thank you for bringing quality knowledge to people so we can actually continue educating everyone. So
100%.
Thank you guys very much. We appreciate you all watching, and we'll see you again next week.
See ya.